Good morning, good afternoon, good evening, folks. Michael Zuber, one red cell at a time, back with his good friend, Mr. Dan Bird. How you doing, sir?
I'm doing well. How are you?
I'm a little nervous. It's been a long time since somebody has given me a test or even a quiz, and I think we're going to do
Yeah.
that, right? You have been helping me
Well,
learn a new language, and we're going to see how I'm doing.
yeah, it's just a pass
Oh,
fail test though.
great. Pass, fail. Even I don't like that, but that's okay. Folks, so if you're going to play along with us, get out a piece of paper because you're going to go through this with me. I have not seen what we're about to go through. So again, you can go through this with me. Let me know where your answers are the same or different. Leave comments below. So Dan, the floor is yours.
All right. Before we jump into it, this is my newsletter. If anybody's interested, I do this every week. There's no charge. Just send me a note at breakpointtrading@gmail.com. And I'd be happy to add you to the list.
Awesome.
Quite a few folks from your channel have requested that already. So
I like it.
And I've had a few comments coming back that people are getting a lot of value and learning a lot and actually making some money in the market. So
yeah,
that's good.
it's fun to see people take action. So thank you for doing this.
You bet. Before I jump into the test, I just want to show this. This is my VIX chart that I'd like to look at. The way I've got it set up is with two moving averages, the 5, which is the red one, and the 21, which is the green one. Okay. And when the VIX is going up, then the market's going down.
Got it.
Right? The VIX is the volatility index or the fear index, if you will. Normally, when it gets way up here over 30, it's too far, and usually the market starts going back up again.
Right.
But the thing I want to point out here is that every time this red one crosses the green one, notice where this is the S&P down below, and I put some red vertical lines in here. So it crossed right here. You can see it was right at the peak, and the market went down. It crossed right here. It wasn't quite at the peak, but pretty close, and the market went down. Right over here, the beginning of 22, crossed right there, right at the peak, market went down. We had a nice little rally. It crossed right there again. Market had a big, huge sell-off to the lows. And then we started back up again, and it has not crossed yet. So we may have some more sideways movement, or this could have a dramatic move up, like it did over here, if the market really starts to tank.
We're going to see.
I think, yeah, we'll find out Tuesday, and after earnings start coming out. I think we're going to go back and test these lows personally down here. 41, 4,200.
Okay.
But this is an interesting one to watch because it's a pretty good predictor of where the peak of the market is. Good time to get out when that cross happens.
Okay.
All right.
Yep.
All right. So let's see. Now I'm going to show you these charts.
Yes.
And let me describe the first one.
Okay. Thank you.
And then I'm going to run through a bunch of them.
Yep.
And then I want you to tell me whether you just say buy or sell.
Okay.
All right.
I can
whether you think the chart is telling you that you should be a buyer or that you should be a seller. And when I say a buyer or seller, I mean of the symbol for this chart.
Totally understand.
Okay.
Gotcha.
So the first few are the sectors. So I like to start high and go down.
Got it.
So these are the sectors, the S&P sectors. All right. Now at the top is the relative strength index, the RSI. I use this in every single one of my charts.
Okay.
Anyone that does technical analysis, this should be a standard indicator on every chart. Relative strength means how strong is this stock or sector or industry versus the rest of the market.
Okay.
Is it stronger than the market or is it weaker than the market?
Got it.
It is an oscillator. What that means is it will oscillate between high and low, and it will indicate to you whether it's oversold or overbought.
Okay.
So when it gets up above 70, typically it's overbought. You can see here, and it doesn't mean it can't stay above 70.
Yeah.
It could stay up there for quite a while.
Okay.
So the way to read something like this is if it gets above 70, then it's a warning. You should start watching. Okay. And as soon as it crosses back below 70 is the indication that you probably should get out.
Got it. Okay.
On the other side, when it goes below 30, then it's oversold. That means there are too many sellers. There's nobody left to sell to.
Got it.
Right?
Okay.
And same thing, it's a warning sign or it's an opportunity. Let's say it's a time that you might want to start watching to get back in.
Mm-hmm.
And you don't want to do that as soon as it goes below because it could stay there for a while. But when it starts to come back up, now it did come up a little bit here. You might have got stopped out quickly, but it came up there and the market actually went up. Okay.
Yep.
This next one is a real easy one to look at. It's nothing more than indicating what this looks like on a weekly chart. Now, all of these charts are daily in nature. They're daily charts.
Okay.
But this essentially tells you what the long term looks like. So on a weekly chart, this one went below here on the weekly chart, which is not a good thing at all. So on a long term, it's not good, right? So this one you can just glance at. Is it doing well weekly or doing bad weekly?
Okay.
Right?
Okay.
This one at the bottom is the actual sector itself. In this case, it's the material sector, XLB, and it's got a 21-day moving average, just so you can visually see if it's trending higher or trending lower. Okay. Okay. The one at the bottom we're not going to use too much, but it helps you understand the price performance. It's also an oscillator, so it oscillates between high and low. Okay. But it helps you understand what the performance is. But we're not going to really look at that. Okay. In the chart itself, so this is comparing the materials to the S&P.
Got it.
How is the materials sector doing versus the whole market? So if it's trending up, then you want to look for stocks in the materials sector and buy the best stocks in that sector. If it's trending lower, you want to sell those stocks and go find a sector that's trending higher and buy the stocks in that sector. Okay. Now, there are 3 moving averages, actually 4. There are 4 moving averages. And if you're going to use any moving averages, these are the ones I recommend. Okay. We'll start with the fastest one, which is the 8-day exponential moving average. Exponential just means that it puts more weight on the last couple of days. Yeah. Rather than having a smooth or simple moving average that puts an equal weight on all of the days. Okay. That helps you see if it's moving more quickly here more recently, the last few days. Got it. So that's an 8-day exponential moving average. The next one, which is the blue one, which is a 21-day exponential moving average. The next one after that is the red one. That's a 50-day moving average, exponential moving average. That's the one that most of the big institutions watch. Okay. They will watch the 50-day. They like for stocks to pull back to the 50-day. It takes them weeks or months to get into a position. Right. If there's a position they want to get into, they might buy a lot of it initially, but they won't buy their whole portfolio yet. Right. They'll wait to see a pullback. And when it pulls back to the 50, they'll buy more. And that's when you often see it bounce off the 50 and go back up again. Okay. Okay. So that's the one that should be on every chart as well. Okay. The last one is the 200-day. And this is a very slow moving, long-term moving average. And when something goes below the 200, then it's really has some problems. Got it. Okay. So those are the 4 that are on here. The thing I like to watch is when the 8-day moves or crosses the 21-day. Okay. That's your first signal that something is happening. Got it. Got it? Yep. All right. So now let's look at all these together. The RSI, and by the way, these indicators by definition are lagging. Okay. Right? Yeah. They have to be lagging because they don't move until the price has moved. Right. So price moves first and then the indicator moves. Okay. However, the RSI is the one that usually moves before any of the other ones. So this is the first one to look at. So it crossed over right here. The weekly started to cross over right after that. The 8-day didn't cross until way over in here, right? And then this is the actual sector itself. You can see the sector crosses its moving average and is starting to trend lower right here. Got it. All right. So you understand all the indicators?
We're going to find out in the test.
All right. So now what we're going to do is we're going to go through a number of sectors. Yep. But now we want to look at the right-hand side of the chart. Yep. And we want to look at the indicators on the right-hand side and tell me whether you would be a buyer or a seller.
I like it.
And if you were a buyer or a seller, try to tell me when you hopefully would have wanted to get in initially. Okay.
Should be fun.
All right. So this is a materials sector. What do you think?
So we're on the same one that you just, we didn't change.
Same one. Nope. We're on the right-hand side of it now.
Yeah. So it appears to be on an up cycle heading towards overbought. It looks like the 8 days above the 21. So it's getting increasingly stronger. It looks like 8 and 21. So it certainly appears to be in an up cycle. You would have wanted, you would want to get in right where the last time it crossed the 50 in the oscillator on top. I don't know what day that is. March 7th, I guess.
It's actually February 7th.
I was
actually, February 14th, actually.
Actually, so in fairness, I was 2 weeks later.
You were over here?
Yeah. So if I went straight up, that's where.
Yeah. So you want to see it crossing from below to above.
Okay. So I was in late. I was in late that example.
This is late, but that still probably would have been a good entry right there.
Okay. Yeah.
But this is when you wanted to get in, or actually,
right there,
or a little bit after it. You don't want it to confirm that it's still heading higher.
Right.
But that's the point you wanted to get in. And you can see the RSI is still heading up. It's not over 70 yet, so it's not overbought.
Nope, still doing good.
So it still may have some room. So what you would do in this case, if you're watching these every day, like I do, you see here when it crosses. I actually had set up scans that will tell me when it crosses.
Right.
It tells me look at all the S&P sectors and tell me when the 8 crosses the 21.
Got it.
On an AM. So it would have sent me an alert right here.
Oh, I like it.
And I would have said, oh, looks like materials is gaining strength.
Got it.
Let me start looking at all the stocks in the material sector and find the strongest one in that sector.
Perfect.
And that's the one I'll buy.
Nice. Okay. All right.
I
like
let's look. So let's look at the next one.
Okay.
Next one is communication services.
Okay.
Okay.
Yep.
What about that? Buy or sell?
Oh. So let's see. So
or do nothing. You could say do nothing too.
Well, it's certain. So it's below the 200 days. Everything's below. It's getting weaker. It's in a downtrend. You're certainly late to sell. You're so far below everything.
Mm-hmm.
Yeah, you're late. If you're still in it at this point, I don't know.
Yeah, you're in a lot of pain.
Yeah.
which actually brings up a good point. It's another way to look at these.
Mm-hmm.
If you had been in it, like let's say back here when it was, the moving averages, the fast ones were above the slow ones.
Yeah.
You might have been in it. You might have been doing pretty well, making money, or it might have been going sideways. You weren't really losing money.
Yeah.
But when would you get out? Say, that's it. I'm done. Now you could say when the 8 crosses the 21, but it did that over here too.
Yeah. I would have said
it did it over here.
The 200 day is the one that I would have had my stop at the 200 day.
Absolutely. The 200 day, no question about it. When it goes below that, you're
Done.
out of this thing.
Out.
And look at all of that pain you would have avoided.
Yeah.
If you had just done nothing more than that.
Yep. So that's what I'd have done.
Yep. And the other thing you could look at is the weekly right here. The weekly right about the same time.
Mm-hmm.
The weekly started really tanking and going down.
Okay.
So this one is definitely not a buy.
No.
It might not be a sell. It's probably do nothing.
Yeah. If you're still in it. Yeah. Oof.
If you're still in it. Next one is energy. Now we all know what energy has done. So what do you expect this to look like?
I actually expected to have quite a pullback. I think it got hot a couple of weeks ago.
There it is.
Interesting.
Energy, you should have got in the beginning of January, first week of January.
Yeah.
Or at least started looking at energy names.
Yeah, exactly.
Look at the strong companies in the energy sector.
Yeah, exactly.
Got in there, and the 8 has never crossed back below the 21.
I would not have guessed that. I would have guessed the 8 day. Well, it came in, but it never crossed.
Never crossed. Right.
Yeah. I would have expected, not seeing this before, I would have expected the 8 to have crossed the 21 sometime in the last couple of weeks.
And it's actually starting to head back up again.
Yeah, that's interesting.
By the way, this really light gray line right here is the actual sector.
Oh, okay.
So these are moving averages, so they're a little
right.
lagging, but the gray one is the actual sector itself.
Yeah.
All right, so it's starting to move back up. So energy might still have some legs to it.
Maybe. Yep.
All right, so let's look at financials.
Ooh.
Any predictions on this?
Not good.
There's financials.
Yeah. So the top one, it's coming off oversold. It looks like it
Coming
just
off,
broke.
it's coming off. Oh, yeah, it's coming off oversold right here.
Right.
Yep,
8-day is
start-
below everything, although it looks like it may have. Yeah.
the 8 is below the 200,
Yeah.
but the 21 is not.
The 21's coming.
Yeah. It looks like it's starting to have a little turn up right there,
Yeah, that's what I just saw. Oh, I wouldn't.
But-
I wouldn't touch this one.
but I wouldn't either, especially with earnings coming up.
Yeah.
But you can see from January, when the 8 crossed the 21, first week of January,
It raced.
it had a great run
It did.
for almost 2 months,
Mm-hmm.
right?
Yep.
So, that would have been the time, if you were watching it, that would have been a time to get in.
Uh-huh.
And then this would have been the time to get out.
Yep. Okay.
All right, let's look at industrials.
All right.
Industrials
Ooh.
not looking too good,
Not good. No. No.
right?
Yep.
So you'd be out of that one.
Yep.
Technology should be interesting.
Yeah.
What do you think? What do you think that's going to look like?
Bloodbath.
Yeah, there's technology. Now, the interesting thing about looking at it this way is it helps you understand when you should have gotten out.
Yeah. It's actually not. I mean, the last couple of weeks is not as bad as I thought it would be, but clearly you should have gotten out.
Well, the last 2.5 weeks up until this past week,
Mhm.
we've had a really nice rally.
Yeah, but we gave it all back.
That's what this rally. We haven't given it all back. We've gone halfway down.
Yeah. Well, we broke the 21, I guess is what I'm saying.
Yeah, it broke through the 21. That's right. So yeah, so you could have got in, but you wouldn't have been in very long. And
Yeah.
interestingly, it went up to the 50. Remember, I said that
Yeah.
big institutions watch the 50.
Bounced right off.
So a lot of times they use it as ways to get out of a position.
Mm,
They'll sell, but they can't sell everything because they will move the market
right.
because of how many shares they have.
Yeah.
So they sell and then they wait for the retail investors to start buying on a bounce.
It's funny.
And they wait for it to come back to the 50 and they start selling again.
Ugh, damn Wall Street.
And
Okay.
that's exactly what's happened right here.
Yep.
All right. So technology is a no. Consumer staples.
Hmm.
Yeah, staples are what you get into when the market is heading towards a recession.
I agree. Not bad. This is the first one that's like, okay, time to go hunting.
Yeah, exactly. And even more interestingly is, when did this start? Way back here in December,
Yeah.
right?
Yep.
So this was giving a signal in the market that all the big institutions that knew what they were doing
Yep.
said we're heading towards some bad times. Now remember, December was a great month.
It was.
There was a huge rally in December.
Mm-hmm.
So when you get staples moving up, and in some cases actually moving the market,
Mm-hmm.
that is a big warning sign. Let's go back
Yeah.
and look at technology back in December. So December technology was peaking, it was sort of going sideways,
Yeah.
right?
Yep.
And then in January, it started falling off a cliff. While at the same time, staples in December had just started its run.
Mm-hmm.
So that was a warning sign in the market.
Yeah.
Staples taking off and technology going sideways.
Yeah.
Real estate. Real estate's all over the place.
Yeah.
This is mostly REITs and
Yeah. Of course.
builders. That type of thing.
Yeah. It's yeah. Okay.
And then utilities, actually, they've been doing really well.
Yeah. Again, recession proof dividend.
Yep.
Yield. Yep.
Again, utilities started taking off back here in December. This is a
Mhm.
defensive sector.
Yep.
So that was a warning sign back here. You can see all the way back through here, when the market was going up, utilities really was going down or really not doing much
Mm-hmm.
until December. They started to take off.
Interesting.
So this is a way to understand what the market itself is doing, is to look at
Okay.
these sectors, know which ones are defensive, which ones are aggressive. This is healthcare,
Yep. Yeah.
Healthcare is going up.
Defensive name. Yep.
right?
Mm-hmm.
And then finally, consumer discretionary, which normally is a great one when the market is heading higher,
Yeah. Not good when it's.
but it's the opposite when it's heading lower.
yeah. Not. Do not.
So you can
touch.
see, remember, staples started taking off in December.
Yep.
Discretionary started tanking in December.
Broke.
So if you just looked at just those two,
Mhm.
you would have known way back in December, even as the market continued higher, that's called a negative divergence. Market continued higher, but discretionary was going lower.
Yep.
So when Staples is carrying the market higher, then all the big institutions are getting defensive,
Yep.
getting out of their positions. All right, what do you think? Fun?
Yeah, it was good. Yeah,
Good
I
stuff?
like it. Yeah. I like it.
We can look at some, let's see, we can look at a couple of stocks.
Sure.
This is what I'm going to do is I'm going to bring up my VectorVest chart too. We're going to look at the same ones on both sides. Now in VectorVest, there's some similar things. Like here's the moving average convergence divergence, MACD, which is a good one for everyone to use as well. What that tells you is all those moving averages that we were looking at, when they are very wide in between them all, you can see up here, all the moving averages have a lot of space between them.
Yep.
Then the moving average convergence divergence is also gaining space.
Oh, okay.
and it's going up. When that starts to contract and come back down, that means these moving averages are the faster ones are rolling over.
I got it.
Right. So that's what that tells you. When this crosses right here, that's usually when the moving averages are crossing at the same time.
Got it. Okay.
Now, what this RT tells you is this is the essentially the speed at which the stock is moving. And the way I have this set up is I have a 5, which is the green one, and a 40, which is the red one. So I like to watch when it crosses as well.
Okay.
So you can see here on this particular name, and this one, by the way, was a really good one. It's a really good growth name.
Okay.
It's one that was at the top of IBD, the IBD 50, Investors Business Daily. This one in AOSL, we're doing really well. They've both fallen off the IBD 50 completely now.
Oh, wow.
But when the market comes back the end of this year, these are the ones that are going to really fly.
Okay.
So these are the ones to know about, to watch and wait, see what happens, and watch all of these moving averages. But this is what this one looks like here.
Okay.
And here's what it looks like on my stock charts. This is my standard stock charts.
Yep.
So again, the RSI, the weekly, the 8-day, the 21-day, the 50-day.
Yeah.
So what do you think on this one?
Let me make sure I got the colors right. Selling. I mean, if I owned it.
Selling. Yeah. Selling or not doing anything and waiting for it to turn back up again.
Correct.
By the way, on my standard chart down here, this top, I won't explain all of them, but this top one right here tells you how it's doing versus the rest of the market, every other stock in the market.
Yeah, not doing good.
And the blue one below it is how is it doing against its own industry?
Got it.
Is it outperforming or underperforming its own industry?
Yeah.
And then the accumulation distribution line here, which you don't see on the sector charts, but you do see on the individual stocks. This is, are institutions accumulating it or are they distributing it? Are they buying it or are they selling it?
Selling, yeah.
So you can see here when the stock was moving up, institutions were accumulating.
Okay.
All right, so there's ACLS. Let's look at AOSL. It's kind of in the same category, right? This is a big growth stock that did really well, but it's fallen off a cliff here lately.
Yeah.
Even during when the market was running up, having this big rally, it didn't growth stocks were not rallying through that.
Okay. In
fact, I think I might have like Microsoft in here too. Here's Datadog. This has been a darling for a long time.
Yeah.
So what do you think?
Same.
Buy.
Sell.
Yeah. Sell it. Or at least wait for it to turn.
Yeah.
I mean, all of these are good stocks.
Yeah.
Good stocks with bad charts. Here's Enphase, which is also one that have been going up really strongly.
Oh.
And it still had been pretty strong recently. But what do you think of it now? What would you do now? Enphase is one. Enphase is one that a lot of retail traders and institutions have been in because it's an energy play.
Yeah.
So this is the kind of stock that the retail investors would say, "Oh, it's pulled back. Buy the dip."
Yeah,
buy the dip. But would you buy the dip?
I don't know. Still being accumulated.
Yeah.
Maybe.
Maybe. This is one that I would wait to see when it turns back up again.
Yeah, when it bounces, or if it
Right.
bounces. Yeah.
Yeah, I would actually watch this stochastic line right here. When the black crosses the red, see right here?
Oh, okay.
And if you go up, this would have been the buy point right there.
Okay.
And over on this one, the black crossed the red and it was way down too. If you go up, this right here would have been the buy point.
Got it.
So that's what I would wait for.
Okay.
This is probably a good stock and a good one to own.
Mhm.
But I would wait to see these things to start to turn back up rather than trying to catch a falling knife.
Very cool. This has been fun.
Yeah. Let's see if Microsoft is in here.
There it is.
Microsoft right here. Microsoft is sitting right on its 50-day moving average.
Yeah.
And it had been below it for quite a while.
Yeah.
So this is another one, these haven't turned up yet.
Nope.
This is a good stock, and it's one that big institutions love to own.
Yeah.
So it'd be one to watch. Nvidia, another one.
Ooh.
Nvidia's fallen off a cliff lately too.
Yeah.
But it's not back to its lows. It hit its lows back here in March, February,
Okay.
around 220.
Huh.
And it could be headed back there. You can see the accumulation distribution is about ready to cross right there.
Yep.
So this is one to watch. Nvidia is a great company.
Yeah.
They're going to do, they still got a lot of runway ahead of them.
Yep.
But it's not quite time to get back in yet.
Maybe not a great stock. Yep.
Not right now, but it's good. It's a good one to watch.
Very cool. Well, this has been very fun. I appreciate you doing this with me every week. What is the what site or what email? Somebody want to be added to your
breakpointtrading@gmail.com.
Very cool. Thanks for all you do, buddy. We'll talk to you next week. Let's see what
You
happens.
by the way, I'll give you a pass.
Oh, pass. Yes. Woohoo. Easy grader. Thanks, boss.